Hi guys, Max here, and this is your daily market update for yesterday, the 19th of July, and it was absolutely insane, as I'm sure you're aware. This heat map behind me is green almost everywhere. There are only really a few companies that fell for the day, IBM and Johnson & Johnson being two of them, and that's because they posted less than stellar earnings reports. Pretty much everything else in the market soared upwards, with tech companies performing better than the standard old world industries. And so the S&P 500 was up by 2.7% for the day. As I said, a massive rally. The Nasdaq was up by 3.1% for the day, and the Dow Jones was up by 2.4%. Across the rest of the world, it was basically the same story again, green across the board, except for a few individual companies that had individual pieces of news that weren't stellar. The Americas were strong, Europe was strong, Asia was strong. The FTSE 100 rose by 1% for the day, while the Stoxx 600 rose by 1.4%. And so on the whole, the MSCI World Index, which tracks every single major company combined together, rose by 2%. Now, going perfectly in line with that, we actually saw the dollar weaken a little bit by about 0.5%, which might sound odd at first, but basically the dollar is behaving as sort of a hedge against uncertainty and a hedge against poor market conditions. So when assets, risk on assets like equities, rise for the day, we have recently been seeing the dollar fall instead. And that's exactly what happened yesterday. The euro rose by 0.8% against the dollar and is back up to $1.02. The pound rose by 0.4% and is back at $1.20. And then the yen is still sitting pretty much where we left off, actually at 138 yen per dollar. What did we see in risk on assets then? Well, pretty much exactly what you would expect actually, with yields rising and prices falling. The US 10-year Treasury yield rose by 4 basis points to 3.02%. The German 10-year yield rose by 6 and the British 10-year yield rose by 2 basis points. So we saw prices in the bond markets fall very slightly as investors moved their money away from safer assets like bonds and treasuries over into riskier assets like equities, which is one of the reasons we saw such a strong rally in the equity market. As for commodities, well, oil prices rose once more, which isn't actually a good thing, but markets just sort of ignored that. WTI crude is back at $104 a barrel, while Brent crude is at $106, and the price of gold has remained pretty much stagnant over the last week, sitting at $1,712 an ounce right now. What happened over in the world of crypto? Well, actually a really strong day as well, with crypto behaving just like the rest of the risk on asset market, showing that correlation to tech stocks in particular once more. Bitcoin up by 8%, as you can see, sitting almost at $24,000, which is about a 1-month high for that coin. It's been below that level for almost a month now, basically since we saw the start of the collapse of a bunch of different crypto companies. Ethereum was up by 4% and is close to $1,600 now, and most altcoins were moving in that same sort of area, 5 to 10% for the day. Solid gains as crypto just moved in line with other risk on equities. Now, why were the markets so bullish? Why did we see asset prices rise across the board? Well, it's earnings season. We're getting a lot of report out from a bunch of different companies, a few of which we will cover today, of course, and investors are just rather confident that it's going to be a good earnings season and that most of these companies are going to beat expectations, and so they're going to see positive reflections in their price due to that. The market has also started to price in lower rate hikes from the Federal Reserve. Currently, it's pricing in a 38 basis point rate hike, which means about a 50% chance of a 25 basis point hike and a 50% chance of a 50 basis point hike. It seems like the markets are just forgetting that we saw another peak inflation figure last month, not even 3 weeks ago, and that it's awful news. Literally 2 weeks ago, a 100 basis point rate hike was priced into the market and everyone was panicking. And now, with absolutely no conditions in the market actually changed for the better, well, investors are just changing their mind and saying that it's not going to come. There's also this idea being pushed around by a lot of pundits, people like Jim Cramer, unfortunately, basically saying that this is the bottom of the crash, that we're now going to see a really strong bull run out of here, and investors seem to be getting a little bit excited. Of course, I think this is entirely irrational. I don't think you'll be surprised to hear that. I think this is a bull trap, and in the long run, it will not last. Now, why do I think that? Well, because the fundamentals which have been driving this bear market are still exactly the same. Inflation keeps getting worse month by month, and that hasn't stopped yet. The war in Ukraine is still going on, and tensions between East and West are getting worse, not better. The Federal Reserve is continuing their rate hiking protocol, and that's not going to stop anytime soon either. And then they haven't even really started quantitative tightening yet, and so when that hits the market, that's going to be another downwards bit of pressure on asset prices. To make matters even worse, the recession that everyone's been talking about and predicting for months now isn't even really here yet. I do think we're in the early stages, but we are by no means at the worst point and on to better things from here. Really, this is just market and investor delusion at its finest. We're about halfway there through this market crash, in my opinion. It is not at all over yet. Now, onto some specific pieces of news. We, of course, got an earnings report out from Netflix, and their share price rose by 8% after hours on this news. So it must have been a really good report, right? Well, no, it wasn't. It's just that the markets expected it to be far worse than it actually was. For example, Netflix lost 1 million subscribers, which is pretty awful for a quarter, right? But they expected to lose 2 million, so investors are still happy with that. There are a few other things worth noting. Netflix is predicting to increase their subscriber base by 1 million people over the next quarter, which is lower than Wall Street expected. They were hoping for a prediction of 1.8 million. Netflix is also getting pretty hard hit by the strong US dollar, which has caused Netflix to lose $340 million over the last quarter alone, because 60% of their revenue comes from outside of the US, and a stronger dollar means that when Netflix takes my money in pounds, well, they're getting less dollars for those pounds. This is something that is very often just ignored outright by people who aren't really interested in finance or economics, but a strong currency isn't always a good thing, and it isn't just a good thing to see your currency strengthen, which of course the dollar has been doing over recent months. Now, Netflix have also come out with a relatively ambitious plan to actually try and jumpstart their growth again. They're putting out a new service, they're doing new tiers to try and draw more subscribers. Basically, they're going to be innovating in this market again because they did get stagnant, they did get a little bit lazy over the last couple of years. To be honest though, there is loads to talk about here, so this is probably a topic for an entire video on its own, so look out for that later this week. Now, we also got some news coming out from Twitter and Elon regarding, of course, Elon trying and then stopping and no longer wanting to buy Twitter. Basically, it's going to court because Twitter are forcing Elon to try and buy it at $44 billion, as that contract stated. And the judge for this case has just allowed for a fast-tracked trial, which is going to be starting in October. Now, Elon wanted it to be delayed by a few months. He wanted it to start actually in February, which would, in his opinion, give him adequately sufficient time to prepare and investigate his claims, which are going to be the bedrock for his case. Now, this is slightly bad news for Elon because he needs a bunch of evidence to prove his claim so that he isn't forced to buy Twitter at a price of $44 billion, and he now has less time to get that evidence. From our point of view, though, I think this is actually good news. Pretty much no matter what side of the political spectrum you sit on here, either you want Elon to buy it or you don't want him to buy it. It is getting a little bit complicated because those who used to want Elon to buy Twitter to save free speech are now advocating against it because Elon doesn't want to buy it, whereas those who before were complaining that Elon was going to buy it and institute free speech, well, they're now rooting for Twitter to force Elon to buy it at $44 billion. It's a very complicated situation, but what this really means is that the situation will be resolved quicker than if Elon had won, and it was going to start in February, and that means less uncertainty for the markets, and uncertainty is awful for the markets. We like to know what's going to happen into the future, and right now, regarding Twitter and Elon, we just don't. Now, we got a little bit of good news coming out from Boeing, which is some of the first good news we've had out of Boeing for almost 2 years now. Basically, they sold 200 more of their 737 MAX airplanes, which have been the ones which are sort of crashing. I believe they are banned from flights in China. Don't quote me on that because I'm not into aerospace stuff, so this is just off my memory. I believe they're cancelled and they're no longer allowed to fly because they've had a few of them crash. As I just said, I'm not an engineer, so I'm not going to pretend to know who's at fault, whether it was pilot error or, just mistakes made in the air, or if it was the plane being fundamentally wrong itself. But it doesn't really matter who's actually at fault because Boeing is the company that's been struggling to sell these planes because of these crashes. Now, this is good news for Boeing because firstly, it means a nice bit of revenue boost for the company. They're going to make a lot of money selling these 200 jets. And it also might be the kick in the arse that actually the industry needs to accept this jet once again. Maybe this will be a show of confidence in the company and in the plane itself. And it could start sort of a snowball effect of other companies coming out and making these same sort of purchases. So this could be the start of the turnaround for Boeing, which I'm sure people who hold that stock will be very happy to hear. Now, we got some more news coming from Cathie Wood and her company ARK Investment, which is, of course, this ETF provider which absolutely blew up over the last few years and has now been blowing up for a different reason, a bad reason. Basically, ARKT, which is their transparency ETF, is being shut down. Now, this is one of their newer ETFs. They've got a whole bunch now. And why are they shutting it down? Well, there's just not enough investor demand for it, as the tech bubble, or the everything bubble that this ETF really catered to, has started to pop. Now, the idea behind it was pretty basic and a little bit uninspired in my opinion. It was basically just Cathie Wood investing in the most transparent companies she could find. In reality, what that meant is she bought the exact same companies in this ETF that she bought in all her other ETFs, companies like Teladoc and Tesla and Spotify, basically anything tech, anything which promises miraculous, ridiculous growth for years on into the future and can never live up to that hype. Now, of course, ARK has been sort of used as an index of overvalued tech companies, and it really is no different today. It's still holding those same companies, which just keep getting hammered. Netflix, for instance, had a good day, right, and rose by 8% after hours yesterday. Well, it's still down 70% year to date, which is an absolutely awful performance. And if you hold Netflix stock, well, I'm sorry for your loss. Really, what we're seeing here is just the end of Cathie Wood as this respected investor. She had that meteoric rise as the bubble was accelerating in its final phase, and now she's seeing a massive crash as that bubble is popping. This is the cycle of markets and the cycle of a bubble, and it's perfectly natural, and these fund managers always come and go whenever we see market conditions like this. Finally then, the last bit for today, I thought I'd just speak very slightly about the British Tory leadership elections, because this is going to determine who is the next Prime Minister in the United Kingdom, and there has been a small development. Kemi Badenoch and Tom Tugendhat have now been kicked out of the race, so that leaves us with just 3 separate candidates for who the next Prime Minister is going to be, and actually they're all relatively status quo, which means there's unlikely to be any massive major shifts in the markets as a result of who becomes the next Prime Minister. Now, very briefly, Rishi Sunak is a very middle of the road type guy. He's been the Chancellor in the UK for the last few years under Boris Johnson, and he's actually a very high tax, high spending candidate. He isn't very right wing at all, but much like the Republicans over in the United States, he pretends to be the low tax, low spending candidate, which is obviously not true, but that's politics for you. He's also working on this idea of fixing the British economy, but he was in charge of the British economy over the last few years. He put out, a bunch of really silly policies like Eat Out to Help Out, which is, one of the reasons we're having such high inflation right now. He was this quantitative easing guy. And so these problems that the British economy is facing, really, if you had to boil it down to one singular person, well, Sunak would be the guy you blame, but he's now claiming that he's the one to fix all of these issues. In reality, he's status quo. He's typical neoliberal globalist. There's really nothing special about his policies. We then have Penny Mordaunt, who's actually a very left-wing person as far as it goes for a right-wing party. She is, though, like the other candidates, pushing for a very strong anti-Russia, anti-China stance. So that sort of foreign policy coming out of the UK is not likely to change if she's put into power either. She's also a basically more spending, more tax kind of person too, although she doesn't really focus as much on the economics of things and focuses more on traditional political issues. Finally, then, we have Liz Truss, who is sort of seen as a continuity Brexit candidate. Basically, she's the most right-wing of the 3. She's very principled on politics, but when it comes to her economics, I don't even really know what her ideas were. I had to look them up prior to this video, and so that should tell you all you really need to know about it. There probably will be tensions between the EU and the UK if she comes into power, and I think she is the most likely to win, in my opinion, and then probably Mordaunt and Sunak, just due to the way that actually this election is going through. It's going to be selected by Tory party members, not the country as a whole. What's really important here, though, is that mostly these are all just status quo candidates. All of the anti-establishment candidates have basically been kicked out by the MPs voting already, so we shouldn't expect any massive radical changes that are going to really disrupt the markets and disrupt your investments as we go on to find out who is actually going to be the next PM. Now, as for the rest of the week, there is going to be, a few more earnings reports. We are in that season, so that should be quite interesting, but one really major thing to look out for is the Nord Stream 1 natural gas pipeline, which feeds Germany and much of Europe with its natural gas, is scheduled to reopen tomorrow, but there's a good chance that it just doesn't. Maybe Russia just doesn't open up the tap. It's supposed to be scheduled for maintenance, but there are a lot of people claiming that this is political posturing by Russia and trying to use this as influence to get Europe to do what they want. I personally wouldn't be at all surprised if this is the direction it goes in, but if they do keep Nord Stream 1 shut down, well, we should expect absolute pandemonium across Europe. This is going to be really massively influential, and it's going to be a massive hit to the European economy if this actually happens. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world-famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, which helps you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you, like me, think crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.